well versed about the funding requirements which any organization has all across through their journey, whether it is to expand, whether it is to meet their operational requirements. There's always a need for fund. And so we collated this program with some of the leaders in the industry who would share their thoughts and give out the various options which you can consider as an organization to fund your business operations. So we would be covering fundraising through capital market. We will talk about banking, digital lending. We will also talk about venture capital. We will also talk about how startups can avail some of the things which are available. We will also talk about P2P lending. We have eminent speakers with us, Mr. S.R. Meena, he's DGM and Regional Manager for SIDBI. We have Mr. Ajay Thakur, he's the Head BSc SME and Startups, Bombay Stock Exchange. We are honored to have presence of Shri Ashish Nandi. He is the Chairman of the Sub-Council Sector for Eastern Region of ASSOCHAM, and he is a National Management Committee member who had been guiding and taking forward this agenda from very beginning. Almost for last 3-4 years we have been working in this domain, delivering several programs. We are also joined by Mr. Prasanna Lohar. He is CIO and Head Digital Banking for DCP Bank, and we have Mr. Mukesh Bubna, founder and CEO of Mosaico, and we have Mr. Somnath Chatterjee as our moderator today. We are honored and privileged that we have been joined by a special guest, Mr. Ravindra Nath. He is the former CMD NSIDC and who has several years of experience in helping and guiding and hand-holding SMEs when it comes to meeting their needs and the requirements. So with much delay, let's start with the session today. I would first invite Mr. Ashish Nandi, Chairman, Financial Services ASSOCHAM and Management Committee member nationally, to share his thought and extend a warm welcome on behalf of the President and the entire ASSOCHAM family to the participants and to our eminent delegates. Over to you, Ashish. You are on mute, Ashish, I think.
Yeah, thank you, Parminder. On behalf of ASSOCHAM, Mr. S.R. Meena, DGM Regional Manager, SIDBI, Mr. Ajay Thakur, Head BSc Startup, Bombay Stock Exchange. Mr. Narendra Wadhwa is not here. I think he'll be joining any moment. Mr. Ravindra Nath, former CMD, National Small Industries Corporation. Mr. Prasanna Lohar, Chief Innovation Officer, Head Digital Banking, DCB Bank. Mr. Mukesh Bubna, Founder and CEO, Monexo. Mr. Somnath Chatterjee, Founder and CEO of Capital Advisory. On behalf of ASSOCHAM, I welcome you all and to this platform. This is a very powerful platform, I would say, and all the audience present here. I welcome you all on behalf of ASSOCHAM. As you know, ASSOCHAM is an apex chamber and it has 4.5 lakhs corporate members who are a part of this ASSOCHAM family. And for last 101 years journey, ASSOCHAM has been working very closely as a voice to this industry. And we have been working, ASSOCHAM has been working very closely with its members to identify the challenges, the opportunities, and the bottlenecks. And we have been working very closely to frame strategies together and bring it forward in such a platform so we can discuss and come out with some kind of solution for growing our business. Now with this post-COVID, I think we can all see that the government is taking several initiatives to put India to a roadmap to position itself as in the bracket of a 5 trillion economy, and several policy decisions are being taken. And this is where the role of ASSOCHAM is much more enhanced than before post-COVID. And we have been working very actively together as a family of the group of members to bring it forward to the government and taking a decision to that we can all work together to take India ahead. Now, in the post-COVID world, the efforts which are being taken by India and the growth are crucial to the global recovery. Without India, the global recovery would be very difficult. And that is the reason the steps which are being taken by India are so important to the entire world. Imagine a world where India goes missing from the sphere of software support, genetic drugs, vaccines, agricultural produce, and other key technologies. Fortune 500 companies would collapse for lack of back office software support. Lack of access to affordable drugs and vaccine made in India would imperil the global healthcare. Various home consumables would disappear from the global retail shelves. Garment retailers would struggle to source cotton, silk, value-added fabrics. Satellite launches, electric vehicles, drones, and robotics, which are highly dependent on Indian software development and support, would become exorbitant. India has a unique opportunity to build itself into a brand, a substantial value player in the global markets, by increasing its participation in technology and capital incentive sectors, and leveraging the scientific know-how and research and development. Post-COVID, India is poised to be a valuable partner to the world rather than a low-cost vendor. Brand India needs to stand for value, innovation, and high quality. But where does the strength of the India lies? It lies in the SME sectors. The SME contributes nearly 30% of the GDP of our country and nearly 50% of export. Lack of capital is a major constraint for the SMEs for their growth and sustainability. Even Indian women, who form a large part of this MSME segment, are confronted with the challenge of not only marketing and other issues, but the main issue of the women entrepreneurs are sourcing capital and cheap capital. Now, coming to the young entrepreneurs who are creating a wave in this business world, as we all are aware of, the current emphasis on creating a new platform and products among India's 12,500 odd tech startups, and India, which is already on the track of creating 50 unicorns in 2021, the potential to create value is evident. They are mostly represented by the young entrepreneurs who need capital and funding to unlock their potential. Over and above, India has witnessed exponential growth in digital transaction. From January to August, there's 6 trillion worth of digital transaction has taken place in India. And India is focusing more on offering technological solutions to every section of the population. And particularly the fintechs, and some of them who are present here, can play a transformational role in this ecosystem. Keeping all these factors in mind and keeping the present environment and keeping the growth of India in the next 3 to 5 years down the line, ASSOCHAM Financial Services Committee thought it would be the most appropriate time to have this event, funding opportunity for SMEs. Thank you and welcome you all once again to this high-powered event. Over to Panelists. Thank you.
Thank you so much, Ashish, for those kind words. Ladies and gentlemen, I would like to introduce Mr. Somnath Chatterjee. Somnath ji is going to be moderating. I would ask him to explain our listeners the context, how we have thought of planning this session out, what exactly we intend to do, and how we want to take it forward, and then request our eminent speakers to share their thoughts. At the end of it, we will have question and answer session. So over to Somnath Chatterjee, please. Somnath, you need to, yes.
Thank you, Parminderji, for inviting me for this. And good afternoon to all of you. Mr. Nandi actually laid out a very good context. I think he's covered most of the things which we will be discussing, while we'll go in depth, but actually he's given the good concept. Thank you so much. I'll quickly reintroduce, rather, we have spoken who are the eminent panelists. I will quickly introduce them again and then let the context. So we have Mr. Ajay Thakur, who is the head BSc SME and startup for Bombay Stock Exchange. He's doing a great work and he'll be sharing some numbers and some milestones that they have achieved today. While we keep hearing about the large corporate IPOs, but I think SME, MSME has been doing a great job by raising capital through the stock markets. So, sir, we look forward to your views how these SMEs can actually raise capital in a cheaper way from the markets. We have Mr. S.R. Meena, who is the DGM and Regional Manager for SIDBI, and he's deeply involved with SMEs and will get a good perspective about what is happening, what is the pain point, how it can be improved by the SMEs. Mr. Ravindranath, who's actually having a vast experience, and he's a former chairman and managing director of National Small Industries Corporation Limited. Plus, he has been on the board of many private and corporate public sector companies. We will also understand from his experience what is the pain point for the SMEs and how they can improve. We have Mr. Prasanna Lohar. Prasanna Lohar, we have a banker. He's the Chief Innovation Officer, Head Digital Banking with DCB. He's done great work on the digital side of it. And in the SME, MSME space, the banks have done a lot of productivity has improved because of the digital side. So we'll get an opportunity to hear from Mr. Prasanna Lohar about the digital side. And we have Mr. Mukesh Bubna, who is the CEO of Monexo, which is the leading P2P peer-to-peer platform. Mr. Bubna has huge experience in India, Singapore, Hong Kong, and he can explain how this self-employed professionals, the owners of small SMEs, how are they benefiting through the P2P and how is the model happening. Also, I'll be speaking on the another route of finance, which is emerged, which is the private equity, venture capital, and family offices. So this is how the eminent panel is. Just to lay the context that what are the opportunities for raising fund or capital for MSMEs and SMEs. See, there are 6 crore MSME and SME in India, and out of that, 85% are not registered. So which gives a huge opportunity to get registered, or we can say there's a huge percentage of it who are neglected or not there. If you look at the digital side of it, while we talk a lot of digital, a lot of numbers have increased, but if you see only 12% transaction are still on the digital, less everything is on physical. So the access to capital for SME and MSME has been a challenge since long. I myself have been working on this SME platform and for a long time. It is that the handholding the lenders have to do to these companies to come up. Like in investment, we say we normally coach the companies to get investor ready. So lenders have to probably go up 1 mile ahead and help the companies to get ready how to access capital, more of knowledge awareness, and the kind of session we are doing thanks to ASSOCHAM. I think these will give a lot of awareness, and the bankers also should give advice, as well as they also need to, bankers and the lenders, to give some concession, some help, and some penetration on the SME side. With this, I will start our discussion with the eminent panel, and the question answer, as you said, we'll take it in the last. So I invite Mr. Ajay Thakur, who is the head for BSc SME and startup with Bombay Stock Exchange, to know his perspective and how can the SMEs and MSME can raise capital from the public. So over to you.
Thanks, Somnath ji, for being such a great moderator. I am also thankful to ASSOCHAM for inviting me to this event. And of course, I'm thankful to my panelists who are very well experienced, whom I know also personally, and I have learned a lot from them. Yes, as far as small and medium enterprises are concerned, they are always considered to be the backbone of any economy, and it stands true also for a country like India, which has got vast population, and there are a lot of job seekers, and therefore we require sustainable business who can provide job to these youths of our country who are seeking the jobs. So there are various ways of funding. We all know that BSE, as Bombay Stock Exchange, which we also know is being in existence for last 200 years, informally and formally for 145 years. And it has been seen as the temple of wealth creation. So in so many years, if you see that the wealth that has been created through the stock exchange or the market capitalization, which we have seen in BSE growing, it has almost crossed $3 trillion. And as of now, it's almost $3.2 trillion. As far as the index is concerned, which we call Sensex, it has crossed 60,000 recently, and today it's hovering around 58,500. So, of course, a lot has happened onto the stock exchange almost 4,800 companies are listed on the stock exchange. So we have been a place where equity culture has been created, and the people have been able to understand that how the funds can be raised to the equity dilution. So, around 10, 11 years back, some association related to small, medium enterprises have approached to the Prime Minister and requested that there should be a SME stock exchange needs to be created where the companies can be get listed in a very cost-effective manner, and they have to do lesser compliances with respect to the main board company. So, a lot of deliberation has happened, and Prime Minister Task Force has requested SEBI to frame the laws regarding SME exchange. And SEBI has come out with the guidelines on 18th May 2010 and requested the stock exchanges to start this SME platform. So BSC being the equity creator, equity culture creator, we thought that let us provide a platform where the small and medium enterprises can raise funds by equity dilution. And therefore, we have approached to SEBI to get the approval, and we became the first stock exchange to get the approval to launch this SME platform on 26 September 2011. After that and before that also, it was a very difficult journey for me because, we have a precedence of OTCI, which has failed miserably. It was for the small and medium enterprises only. And the guidelines which have been framed on for this SME platform was more or less same that of OTCI. So whenever I approach to the merchant bankers and other stakeholders of the capital market, they always give me example of OTCI and say that when it has not succeeded, how you think that the SME platform will succeed? Then there were intermediaries also for whom, the cost profit analysis was not working in their favor, and therefore they were also not, very much inclined to work for SME platform. And we being the regulator, we can't ourselves start the merchant banking activity. So my job was to create a whole ecosystem against the wind, because a lot of pessimisms were there in the market. Even the big houses, consultancy houses were also not so much positive about this SME platform. So we created a new niche set of intermediaries for this SME platform. So a new set of merchant bankers have come who have not experience of the merchant banking, but they were working as syndicate bankers, and they have been, I try to bring them onto the SME platform so that they can get these small, medium enterprises listed on our SME platform in a very cost-effective manner. So new merchant banker came who have no experience of merchant banking on the main board of the stock exchange, but they have become a big strength for us, and they started bringing the SME company. Then my job was also to approach to the small medium enterprises and convince them and bring to the SME platform. And let me tell you, in last 10 years, we have, in fact, I personally have met 36,000 promoters, almost 10,000 chartered accountants, and 5,000 company secretary across the country. And let me tell you, it was so difficult. It was a Herculean task to bring these SMEs onto the capital market. There were a lot of myths, lots of fears, fear of compliances. They think that once they get listed, they have to do lots of compliances. Their focus will shift from business to, the compliances. So these fears, and therefore convincing them, their financial advisor, was extremely difficult. You can understand, after meeting 36,000 promoters, I have been able to bring 400 companies onto the SME platform. So it was very difficult, and I can understand that, the promoters are technocrats. They are not financial people. And in India, financial awareness is very less. And when it comes to equity market, it is much more lesser. So these were the problems that I kept on tackling, but finally we succeeded, and at least today we have got 348 SMEs listed onto the stock exchanges on the SME platform. They have raised almost 3,710 crores from the market, and today the market capitalization is almost 37,100 crores. So this much of wealth has been created. Now, what are the guidelines? The guidelines on the SME platform are very simple. What we say that any company which is in existence for 3 years, and in any 1 year they have got operating profit with 1.5 crore net tangible assets and a paid up capital below 25 crores, can get listed onto the SME platform of the stock exchange. So there are 4 eligibility criteria. Number 1, they should be in existence for a minimum period of 3 years. Number 2, they should have operating profit in any of the preceding 3 years. Number 3, their net tangible assets should be minimum 1.5 crore. And number 4, their paid up capital should not be beyond 25 crores, that is above 25 crores. So if they are meeting these eligibility criteria, they can get listed onto the stock exchange. And there are lot of companies who are meeting as of now this criteria. So the criteria again is very simple. Any company can fit this criteria. Now the question arises where the promoters keep on asking us that what are the benefits of listing. So through this platform, I would like to just very fast go through the benefits of the listing. Number 1, most of the companies go for debt funding. We are saying that now you have a platform whereby you can raise funds by diluting your equity. Minimum dilution is 25%. And with that dilution and getting the funds from the capital market, you can use it for your capex or opex, or even reducing your bank loan. So that is the one benefit. Of course, everybody is looking for funds. Second benefit is the balance sheet. The balance sheet post listing gets strong. Now, this is the weakest point or weakest link among all the small and medium entrepreneurs. I have seen 36,000 balance sheet, and what I found is that the turnover ranges between 10 crores to 600 crores, and profit ranges from 10 lakh rupees to hardly 3 to 4 crores in 99% of the cases. And the biggest reason for this is that they all are over leveraged. If they want money for any purpose, they just go to banks. And in tough times, it becomes very difficult to service this loan, and that's why these NPAs have suited up. Now, what happens when the equity funds come? Okay, there is a balance between debt and equity. Okay, no longer your balance sheet remains imbalanced. It becomes really becomes balanced. Your profitability moves up. That is, bottom line moves up, and it gives confidence to the investors, to the bankers, and other stakeholders. So this is the second very important benefit. The third benefit is that the company gets visibility. No longer you are in a tier 2, tier 3 cities, or being seen as a company in tier 2, tier 3 cities. You are listed onto the stock exchange, being traded there, and everybody can see you. Everybody can do research on your company. Everybody can understand what business you are doing. So listing increases the visibility manifold. Number 4, credibility. I have gone on many platforms, and let me tell you, there is a lot of problem with the credentials of the promoters. Somehow people are not very much comfortable in giving loan to, because they think that there is a lack of transparency and the promoter takes every call. Okay, so that is a big problem. But what happens when you come and get your company listed? The perception changes. Okay, that no, there is now some level of transparency in the company, there is some level of compliances, and this gives comfort levels to the lender or the investors. So that is another benefit. Fifth benefit is the employee. Employees are the strength of the company. So the company can issue ESOPs and can retain the best of the employees and increase the productivity of the company. So that is the fifth benefit. Sixth benefit, this equity becomes your collateral. Tomorrow, if you don't have sufficient collateral and you don't want to dilute your equity, you can keep this equity as collateral and can get loan. So that is the sixth benefit. And seventh benefit, that your equity, which doesn't carry any value, because most of the promoters don't know where their share certificate are. Now, when your company gets listed, your share certificate, which was nothing, has got a value. Your company's valuation have got unlocked, and you can raise funds at various intervals of time. So these are benefits that you can enjoy by getting your company listed onto the stock exchange. We have reduced the eligibility criteria. Most of the companies meet these eligibility criteria, and they can get listed onto the SME platform of the stock exchange. Only thing is that they have to remove that inertia. They have to remove that bottleneck. They have to remove the myths and the fears and venture into getting themselves listed onto the stock exchange. That is the only thing that these promoters have to do. We have seen the companies creating huge value, and we have seen the company transforming, and Here also one thing where I will like to handle the fears of the promoters. Here on the SME platform, we have reduced the compliances to minimal. The company has only to file the result on half-yearly basis, that also unaudited, and yearly audited results they have to file. So as far as the compliances are concerned, it's much more lesser than the main board of the stock exchange. So the companies don't have to fear for anything. Still, out of 348 companies, 114 companies on their own have decided to migrate to the main board of the stock exchange. It means that there is no reason to be scared of getting yourself listed onto the stock exchange. So with these words, thanks a lot to all of you. If there will be time left later on, I would like to address on other aspects also.
Thank you, Mr. Ajay Thakur. I think it was a great perspective, and the hard work which we have done, meeting 36,000 promoters and ultimately getting 348 listed. I think it shows the journey you have traveled, and I'm sure this number will keep doubling with your efforts. And yes, rightly, you explained the benefits very well. What are the benefits of getting listed? Credibility, then debt, then taking loan, which is basically you can leverage on equity. These are very, very, I think, important points. And SMEs have another problem which you mentioned, yes, about the balance sheet, that you can see the turnover at 600 crore, but probably the profit is hardly 2-3 crore. So it could be the interest cost, it could be showing the numbers and various things. I think you touched upon all the points, and probably we'll come back to you if there's a question and answer. But I think more awareness, as you met 36,000 SMEs and MSMEs, how more. Yeah, I think there was a video. So I think, sir, I think as you say, we have about 6 crore MSME and SME, and we have a large number. Probably more awareness needs to be done with these SMEs on the listing part of it. Probably this is something we all should be thinking how this awareness and could be spread so that people know the advantages. With this, thank you so much. With this, I move to our next speaker, Mr. S.R. Meena. Mr. Meena is a DGM and Regional Manager, SIDBI. And sir, over to you. We want to know your perspective about opportunities in funding for SMEs and MSMEs.
Sir, Somnath sir, Somnath sir, myself,
Yes.
Kallul Ghosh. Sir, Mr. Wadhwai has joined with us.
Okay. Mr. Meena, will just come back to you, Mr. Wadhwa.
Okay. Thank you. Yes.
So, thank you, Mr. Chatterjee, and thanks for the opportunity. Good afternoon, everyone. On behalf of ASSOCHAM, I sincerely welcome you. I mean, I was late, sorry for that, because there was some SEBI meeting, regional meeting, so I was stuck there. So, welcome to the MSME Funding Alternative Program. It's always a pleasure to listen to Ajay Thakurji. And he is so passionate about MSME and SME listing. We have been hearing him all along, and he's so passionate about it. We call him a SME man of this country. So many companies he is interacting regularly. So although explained by him the importance of MSME, I'll again revisit those data points. Say 7% of our GDP is coming from MSME sector, and it's a major employer all across. It contributes 45% of the manufactured output. 40% of our exports are coming from this SME sector. 50 million people are in direct employment by this SME sector. In spite of its importance, but MSME and startups are adding more value to the long-term economic growth and prosperity of the country. One of the traditional supplier of long-term financing, banking system has undergone a significant deleveraging since last global crisis, and they are reluctant to provide long-term money to SME sectors. So here is an alternative, valid, potent alternative to long-term funding. Say we are a country which is growing at 10% kind of GDP. We need a risk capital, and risk capital comes from the equity only. And as rightly said by Mr. Ajay Thakur, there is a huge scope for listing and a huge scope to tap the equity culture of this country, which has evolved in last 2 years. Although there was a pandemic, and I am in this industry for last 30 years, we were hearing that India will grow, there will be equity culture, but it was all academic talks only. So, but what we have seen in this pandemic, there was a total disruption. Total disruption means we used to have 2 crore active accounts in DP. In last 2 years only, we could add more than 6 crore accounts. Now we are, BSE figure says they have unique 8 crore accounts. So there is a equity cult which is being building up, and I think there is a huge scope for alternate funding from SME sector. I, being a part of ASSOCHAM for so long in National Executive Committee and also the chairman of the Capital Market Committee, we did 1, 2, 3 programs earlier also. But I think as a merchant banker also, we are registered individually as a merchant banker also, closely working with Mr. Ajay Thakur. There is a huge scope, and there are pockets. We, as Ajay Thakur ji is meeting so many people, we are also as a marketing tool, we are meeting so many of the SMEs. There are number of clusters where people are just, I just happened to attend one meeting of Globe Oil. They are edible oil companies, and I had a opening. I was given an opportunity to give a opening address to that audience, and once I was out of this dais, that was a physical meeting. All were around me. That was the day when we crossed 60,000. They want to raise money. They want to access this market, SME platform, or the main board platform of the exchanges. So I feel huge scope, people should, and Mr. Thakur has just mentioned the apprehensions of the promoter and the consultant associated with them, the chartered accountants or the auditors. They have certain apprehensions. Once they sit on the table, we try to meet those expectations and clear those apprehensions. Huge scope for SME listing. Ajay Thakur ji is there and whole team. ASSOCHAM is there to help you out whenever you need any hand-holding kind of thing. With this word, I close here and thank you all the participants, especially Mr. Thakur. Thank you. Thank you, Mr.
Thank you, Mr. Wadhwa, for such a insightful speech and motivating. Thank you so much. Now I hand it over to Mr. S.R. Meena, who is the DGM and Regional Manager for SIDBI. Over to you, sir.
Thank you, Somnath ji, respected Ashish ji, Mr. Narendra Wadhwa ji, Ajay ji, Mr. Ravindra ji, Prasanna Lohar ji, and Mukesh ji, and my dear MSME participants who are in this webinar. This presentation can be shared. Can I request
it will be shared,
share the presentation? Yeah. SIDBI is basically a all India financial institution for the MSME sector, and our activities are includes the indirect lending and then direct lending, then promotional and development activities. Indirectly, we are working through various primary lending institutions, all banks, public sector banks, private sector banks, small finance bank, NBFCs, MFI. In promotional and development activities, we are doing number of activities for the promotion and development of MSME sector. And for the direct lending, we are directly doing the lending activities for the MSME sector. So we will touch some of the schemes of SIDBI which can be helpful to the audience in this webinar. SIDBI, after this COVID, has started this scheme, ARISE scheme. It is abbreviation of assistance to re-energize capital investment by MSMEs. So this scheme is basically planned to incentivize the MSME units. We have those who have the excellent repayment record with SIDBI, and they have timely implemented their projects. Under this scheme, the term loan is available at very concessional rate. Now SIDBI has come up with the marginal rate of interest, MCLR based rate of interest, and presently our MCLR is about 6.85%. So this rate will add some spread from SIDBI, and that can be availed from SIDBI. Under this scheme, the loan can be for 7 years, and with certain benchmarks, it can be extended for 10 years. And under this scheme, 100% finance is available if the loan amount is up to 3 crore, and if the loan amount is more than 3 crore, and the lending is about 75 to 80% of the total project cost. The brownfield units having the minimum 2 years of operations are eligible under this scheme, and this would have some cash profit in the last audited balance sheet. This is the sector-based scheme, and some of the sectors which are included in this sector, about 25 sectors are included. Majorly it is covering the major MSMEs in our country. And generally, we give up to 5 crore loan under this scheme. This is the scheme for the existing customers who have availed a loan from SIDBI. And for the new customers, the second slide, we will discuss about that scheme. This is the Stapan Scheme, and this is the abbreviation of SIDBI Thematic Assistance for Purchase of Capital Investment by the New Enterprises. This scheme is available for the greenfield units who are setting up their project first time. And the feature is under this scheme, we have a one-time incentive grant assistance up to 1%, 1 lakh, and certain percentage of their outstanding, and that can be used for the further promotion of their activities, like some creations, some display centers, participating in marketing fairs, branding, etc. Under this scheme, the rate of interest is very minimum, and it is based on the MCLR of SIDBI. The repayment period is again the 7 years, and that can be extended up to 9 years with 2 years of repayment moratorium period. Under this scheme, we can fund the land building also, and machinery also. Generally, the loan up to 15 crore are covered under this scheme, and this can be extended up to 20 crore for certain benchmarks. And 75% of the project cost can be funded by SIDBI under this scheme. These are the new schemes introduced by SIDBI post-COVID. This was the scheme already available with SIDBI. That is for focusing the 25 identified sector under the Make in India scheme that was announced by the government of India some few years back. And this is available for both manufacturing and service sector enterprises. Greenfield units are also eligible under this scheme. Under this scheme, the loan size, we expect that about 5 crore loan per customer we will give the loan under this scheme. Certain benchmarks are there. Those units who are meeting these benchmarks can be covered under this scheme. Again, this scheme is also based on the MCLR of SIDBI, and the rate of interest may be from 6.5% to 8%, depending on the internal rating of the bank based on their financial and other strength. Repayment period up to 7 years can be availed by the customers. Under this scheme, if the customer do not have the collateral security, this can be covered under CGTMSC also, that is up to 2 crore rupees. And the CBIL and CMR, that is the standard criteria of the banks nowadays, will be used under this scheme also. Next slide, please. Okay. SIDBI has tie-up with 3 banks for extending the working capital limit. Basically, we are the term lending institution, but with the recent introduction with some of the bank arrangement with some of the banks that includes the IDBI Bank, Yes Bank, and City Union Bank. So we are using their platforms and extending the working capital limit to our customers. And this facility is available for the existing customers of SIDBI who are solely banking with SIDBI. And the well-performing unit where the term loans are already with SIDBI, that can avail this limit from SIDBI. New entities can also be can avail this facility subject to certain benchmarks. And up to 5 crore generally we are providing this working capital. More can also be provided some benchmark norms are met by the unit. The attractions are, again, this scheme is also linked to our MCLR that is very low, that is 6.75%, plus certain spread maybe some 1.5% or so. So it will anyway less than 8%. It can be in the form of the overdraft facility, and as the banks do, the validity is 1 year, and this can also be covered under CGTMSC if collateral security are not available with the customer. Next, please. These are some of the schemes for the funding of machines, exclusive for machines. SIDBI is having tie-up with the major OEM manufacturers of our country, about 41 in numbers. And if the customer is purchasing machines from these OEMs, these are the scheme, the Speed and Speed Plus. Under Speed, he can avail the loan up to 1 crore, that is the new to bank, and 2 crore for the existing customer. Without any collateral security, only the margin which are required to be put in the project, that is to be placed with SIDBI in the form of FDR. So effectively, no other immovable collateral security is required under all these three schemes. About 20 to 25% we take the margin in the form of FD and release the 100% payment to the OEM supplier. The rate of interest is also about this 7.75%. Now it has also linked to our MCLR, and this can be lower also, 6.75 plus some spread of SIDBI. This Speed Plus is for the loan above this 2 crore rupees. If the requirement is higher, then this can be availed, but the distance of unit under this Speed Plus will be 5 years, and in the case of Speed, it is 3 years. So the those units which are 5-year-old and they require loan more than 2 crore rupees, up to 3 crore rupees, they can avail under this Speed Plus scheme. And again, the finance is available 100% of the cost of machine, and the margin is to be placed with SIDBI in the form of FDR, that is about 20 to 30%. The Pratham, that is the scheme which is not from the OEM customer. The customer is purchasing the machines other than the OEM customer approved by SIDBI or having arrangement with SIDBI. They can avail the loan under Pratham, and the difference is this slight, the margin requirement is higher in Pratham, but the vintage is 3 years, and the interest rate is similar to Speed and Speed Plus. So these schemes are exclusively for machine funding. Very small application form, in about 2 to 3 pages application form. And from SIDBI side also, the appraisal format is very easy and small, and this can be delivered maybe within a week time. Can we move to next, please? Recently, you might have seen in the newspaper that SIDBI has launched this scheme, Ubharte Sitare, that was inaugurated by Honorable Finance Minister. And this is exclusively for the export-oriented units, those who have the potential for the export from our country, and the identified sectors are 25 major sectors are covered. And this scheme is being operated in association with Exim Bank. If the requirement of the loan is low, then SIDBI can alone fund it. But the requirement is high, then we can have the tie-up with this Exim Bank, and the requirement can be met. Again, this scheme is also available on the attractive MCLR-based SIDBI scheme, and the promoter contribution is only 20%, and it is 30% for the new units. And this scheme is available both in rupee and the foreign currency. Under this scheme, some technical assistance like the mentorship support, equity support is also available. That is, and the incentive for the 25 BPS if the unit achieve the performance milestone set up at the time of appraisal of the loan, then this incentive is available. Again, the loan tenure can be maximum 10 years with 2 years of repayment period. This is the scheme recently launched. Next, please. Okay, SIDBI is having this scheme for the captive consumption of the solar power some of the MSME units may be interested in setting up the solar power plant using by their rooftops. So we have arrangement with some of the OEM manufacturers of the solar panels. So this scheme can be covered for those. And under this scheme also 100% finance to the total project cost is available, subject to 250 lakhs per borrower per unit. The minimum amount is 10 lakh rupees. The payment period is again 7 years, and this scheme also do not require any collateral security other than the margin to be given to SIDBI in the form of FDRs. Under this scheme, the unit should be 2-year-old and it should be earning the cash profit during previous 2 years. Only on-site projects we are covering under this scheme, and we are giving a repayment period up to 5 years. This scheme is also available for the person who was not giving the FD, but they are meeting some ISCR norms, or they are okay with the CGTMSC cover. Next, please. Recently, you might have heard read in the newspaper, heard in news that this guidelines and the time has been extended for the ECLGS. And the updates I want to give to the MSMEs for the benefit. The time has been extended to 31st March 2022, and it was it has expired on 30th September, but now it has been extended up to March 31st, 2022. And the disbursement can be availed till June 30, 2022. Under the customers who have availed loan under ECLGS 1 and 2, additional 10% can be availed for their outstanding as on February 29, 2020 or March 2021, whichever is higher. So this 10% additional benefit now available under this scheme. And the customers who have not availed the ECLGS facility, they can avail 30% of their outstanding as on March 31st, 2021. And the first time customers under borrower under the ECLGS 3.0, that was for the specified sectors like hotel, hospital, resorts. Now this 40% of the outstanding as on March 31st, 2021 or max 200 crore can be availed by them. Existing ECLGS customers can avail the eligible incremental support also. Suppose their outstanding has increased from 20 to 21, so they can avail the incremental portion of this outstanding eligibility. As per their eligibility, maybe 20%, 30%, or 10% based on the cap maximum given by the NCGTC. So these are the latest ECLGS update, and customers can approach their respective bank for availment of this facility. And this is 100% guaranteed by NCGTC. This scheme already all banks are operating this StandUp India scheme. This is especially for the SC, ST and women entrepreneurs. One bank branch has to do one case for SC, ST or one case and for women entrepreneurs. So every branch has a target of 2 customers every year. So this scheme is available for rupees 10 lakh to rupees 100 lakh. And it can be availed both in the form of term loan and working capital. It can be composite loan also. The margin is 15%, and it can have a convergence with the state government subsidy also. All MSME units are eligible. Service sector also eligible, and the last date of this scheme has also been extended till 31st March 2022. Next, please. Sorry, the scheme validity has been extended up to March 31st, 2025. I think others are the rate of interest which bank will be charging, respective bank will be charging as per the pricing policy. We can skip this slide. Next, please. CGTMSC, as we were discussing, this CGTMSC scheme is available for the loan up to 2 crore rupees. And for the retail traders up to 1 crore, this scheme is available. And these are the rates charged by CGTMSC, and guarantee is normal guarantee is 75%, or higher coverage is available for the women entrepreneurs and the entrepreneurs from the Northeast. Now CGTMSC is available in the hybrid model also. Hybrid model means suppose one customer has a collateral security, but collateral security is not sufficient to cover the entire loan. And the part of the loan can be covered as the collateral loan and part of the loan under CGTMSC. By this, they can save some of the premium to pay to CGTMSC. So this hybrid model is available, and this can be used. Next, please. Next slide. We can skip this. This is for the bank. This hybrid model we have discussed. Next, please. Okay. So these are the some of the schemes available with SIDBI and the banking platforms. You can avail these schemes. Especially, I would like to request you to approach your respective bank to avail this ECLGS scheme, because now it is open and the last date has been extended, and it is a very easy scheme and no much paper formalities. Rate of interest is very reasonable with each of the banks. With these words, I will sum up this. I will conclude my discussion. Thank you.
Thank you, Mr. Meena. I think it was a very well explained and detailed presentation. And I'm sure all the participants who are there from SME, MSME would have got the idea. And I think there are a lot of schemes which you have mentioned and not known to everyone. And as you rightly said, they can approach the branch or the website address you have given for the same. Thank you. It was a good perspective.
Thank you, sir. Thank you.
Now we move to, I'll invite Mr. Ravindranath, who is the former chairman and managing director of National Small Industries Corporation Limited. And he's got a vast experience on the SME side. So over to you to know your perspective and the challenges and how to overcome that. Over to Mr. Ravindranath.
Well, thank you very much, Mr. Chatterjee, and a very good afternoon to all my co-panelists and the participants to this program. Truly, I thank ASSOCHAM for picking up such an important cause, and especially at this juncture as we are emerging out of the COVID, the business scenario is gradually going back. We all know how difficult it is for everyone as the pandemic, it spread from a health disaster to an economic disaster. But I was listening to Ajay Thakurji as well as to Mr. Vadvaji, and it reminded me of what we always do for MSMEs. We always say with great sense of pride about what their contribution is to manufacturing, to GDP, and we rattle out a few numbers, about 4 or 5 of them, and then suddenly we are into a lull. I could understand the challenges which Mr. Ajay Thakur is facing when he says that he could reach out to 30,000 numbers. Truly, I appreciate the amount of work Mr. Thakur is doing while making these MSMEs switch places, moving on from one level to another. And another thing which we all have in common is we always say they are the engine of growth. They are very dynamic. They're the backbone of the economy. But then at times we find that this backbone is always getting weaker, whether it was the demonetization at one side or whether it was the COVID pandemic or the other. And we always leave them to fathom for themselves, come what may. But good that these programs are really coming out, because what we believe and what we find, if you look at some of the data which is available, though I largely refrain from using the data because these numbers, you never know when they have been last updated. But the numbers which still click in my mind are that 94% or 95% of the MSMEs are still proprietorship concerns. There are very few who are into that, the company style of formation and all that stuff. People say that we can still count them. And you were also mentioning in your address that how many are registered and how many of still are unregistered. The challenge remains the same. I was amazed when I was reading the numbers which are available in India, about 6 crores, and some say it is 10 crores now with the trading people coming in. Because we do not know when the last census is there. We were mentioning about technology. the technology, even in this COVID times, has enabled us to do it. Why can't the same technology be used to create a database where we get to know what these different strata of the MSMEs are requiring? Because they are at different stages of evolution. Everybody doesn't need equity. Somebody needs a different sort of a hand support. Somebody needs a different, maybe from the bankers. And if you really look at these things from the MSME perspective, if you ask them, they will always say we need funds which are low cost and we can quickly come to know of it. One thing which really emerged in the COVID scenario was, and which even the then MSME minister mentioned, was these liquidity challenges of these MSMEs. We might say that they have to be paid in 45 days and all that stuff. But look at the reality. That is another challenge. That is where they need these funds. We might have created these threads, but how many of them are going there? So automatically the working capital requirements emerges as a big challenge. And pardon me for saying so, I'm talking from experience. Now that I am out, I can very candidly share with you all that all these policy and institutional interventions which are there, which are expected to work seamlessly in creating these policies, unless it really happens, it all ends up as wishful thinking. And the biggest factor is the left hand doesn't know what the right hand is doing. And what I mean by a left hand is the MSMEs, and right hand I mean all the policy generators and policy formulators. Because even if you look at today, what was being announced as a part of the COVID funding support and all that, how many of the MSMEs could really come out of it? And the fear factor always remains on both sides. As I was mentioning to you, Chatterjee Sahab, the biggest challenge today what we are finding is there is a big trust deficit. There's a huge trust deficit when you look at the bankers. I was listening to Mr. Wadhwa, or probably Mr. Thakur said about the balance sheet. And let me take this a minute of yours and say that still we have not come out of that mindset where we make more than one balance sheet and make it for different purposes. Unless all these things get formulated, these trust deficits which are there will never be able to come out. And how do we come out of it? I do remember there was a tool which was generated by us in NSIC and shared with the government, and it was implemented by the government, which was called the Performance and Credit Rating Scheme for the MSMEs. I find suddenly it has evaporated, and that is what is being needed. Let us not go by algorithms and find out as to what would be the standing of a unit, because ratings and algorithms are totally different stuff. But while all these things happen, even today, having been declared as a priority sector lending, why is it that the banks are very reluctant to fund them? With due apologies to my friends in the banking sector, definitely they also have these challenges in front of them, because they always find that all these MSMEs are high-risk borrowers, low on capital, and insufficient on their assets in terms of collaterals. Mr. Thakur was very rightly mentioning about how these things can be addressed. But then there are high transaction costs, lower margins. And that is why some of these bankers always look to other organizations who can come in and step in. And we in NSIC, I remember at that point in time, even today, we collaborated with the banks and took those things on us to reach out. Because ultimately, MSMEs need funds. And again, if you look at the credit gap, which is there, I would not like to quote the figures. When I was reading the figures of the credit gap which remains, I was reminded of a song of a Hindi movie in 1958. Fir Subah Hogi, where Raj Kapoor, he sings, Wo Subha Kabhi तो आएगी। हर एमएसएमई भी यही सोचता है, वो सुबह कभी तो आएगी, कभी मुझे सस्ता पैसा भी मिलेगा, बिना ज्यादा दिक्कत के भी मुझे पैसा मिलेगा। एंड दैट इज वेयर, you know, at least I can share, not only SIDBI does it, but there is another organization which does it, and that is called the National Small Industries Corporation. Let me tell you, we provided integrated support, we still do it. And we take these units, small units, from one level to another, and we make them mature enough to reach a level where we would like to hand them over to people like Mr. Ajit Thakur. Because ultimately, if the scenario in our country has to change, we need more and more people to reach that level. But then, let me just quickly touch base upon what we used to do. We used to provide integrated support in terms of technology, in terms of marketing, in terms of finance, and in terms of other support services where we had a B2B portal. First and foremost, we always believed to collate the requirements of the raw materials, because every penny to a small scale unit is counted in terms of money. How much do they save? How much do they earn? And that is where we helped. Whether any type of raw material they required, we assisted them, and then backed it by providing them the financial support, 180 days credit on very easy terms, and we had a pan-India presence. Again, as I was mentioning, those bills which they do not get the money in time, we also have a bill discounting scheme. And in addition, if somebody doesn't want to come and simply wants to take assistance from the banks, because today the challenge remains, people can't reach out on their own. You know, if we talk about people who want equity, who want all that, they are a different league altogether. But there are smaller units. I did get a chance to travel across India to those parts of our country where the units are really small. And it is they who require a hand-holding. And for them, without any charge to them, we introduced a scheme called the bank tie-up scheme, where we would mobilize the proposals from these SMEs and give it to them, to the bankers, to appraise and fund them. And it turned out to be very successful. And as we would have also heard, the government is also coming up with the fund of fund, which they have given it to NSIC. It's a 10,000 crore. Definitely it is overdue. And I'm sure very soon they would be coming out with that. They have already assessed that the target group is going to be the MSMEs with market potential to grow, but are stuck due to lack of funds, limited access to market, and debt funding is difficult to come owing to borrowing cost, inability to provide security, and over leveraging. All these factors which Mr. Ajay Thakur was also mentioning. And that is where they have decided that the fund life is going to be about 15 years. The commitment period of the daughter fund is going to be up to 6 years from the date of the first closing. And the fund of funds will be a revolving fund, as earnings from the fund, from the investments made, would be reinvested. So this is going to be another very, very big help for all those who would like to graduate. My personal experience, which as I was listening to Mr. Ajay Thakur also, my personal experience is, again, there is a very big fear factor. अगर इक्विटी किसी और से पैसा लेके और उसको अपने इक्विटी बेच देंगे तो कहीं ये ना हो कि पूरा बिजनेस ही लुट जाए, पूरा बिजनेस ही कोई छीन के ना ले जाए. This is a very big factor which is there in the minds of all this. What we need to come out with is huge success stories. And I would request ASSOCHAM to devote more space in educating our people. I would very often talk to my minister and tell him that all these channels which we have, instead of the whole day crying, shouting their throats hoarse, should come out with success stories of these MSMEs who are really called the building blocks of our economy. The experiences which I have overseas also, everybody is looking towards India, everybody is looking towards Indian MSMEs. But our MSMEs are literally suffering. And if we really want to help them out, it is trying to bring them on board and create bridges where we can address these trust deficits. And one of the roles which these associations have got to play, these chambers have got to play, is to step in as act as peer pressures on their members that, well, we will ensure that defaults would not happen. I have seen it happening in some of the very close places to my corporate office in Delhi. There are industry associations where members stand beside each other, and they always see that they not only get the money, but they always ensure that there are no defaults happening. That is when the entire area of the MSME fraternity can change. Also, as I am on the board of IFCI Venture, even the Ministry of Social Justice and Empowerment, Government of India, has come out with venture capital fund for scheduled castes and venture capital fund for backward classes. These are two very good funds where people, the MSMEs from the SE side and the backward classes.
Sorry to interrupt. You'll have 2 more minutes because we have.
I know, Mr. Chatterjee. Don't worry. I'm aware of my time constraints, and I'll finish within that. That is why I'm quickly moving.
Thank you.
And all these funds are there for the scheduled caste entrepreneurs, for the backward class entrepreneurs. Their details are available on the website of IFCI Venture Fund. And I'm sure if we are able to access these funds, because today the biggest challenge, as I said, was lack of awareness. People don't know where to go, where the funds are being available, how can they be accessed. And if that handholding happens, and I'm sure the MSMEs would be really soaring the world of success, not only in India, all over the world. And the dream of our Prime Minister to make an Atmanirbhar Bharat would be a certain reality. Well, thank you, Mr. Chatterjee. I think I finished 1 minute before what you gave me.
Thank you, Mr. Ravinath. I think good points touched by you. And yes, one of the important points you mentioned about the trust factor by the bankers and the balance sheet. So basically, what we say, what is small today will be large tomorrow. Today's SMEs will be corporates of tomorrow. And we also enjoyed your 2-line song from Raj Kapoor movie. I think it was quite nice. And thank you so much. We really got a good perspective. Now I move to Mr. Prasanna Lohar, who is the banker we have on board. He's the Chief Innovation Officer and Head Digital Banking from DCB. And we want to hear his perspective, how digital lending has changed or disrupted the lending to the SME and MSME sector. Over to you, Mr. Prasanna.
Thank you, Mr. Somnath. I think it was a very good learning session, rather eye-opening session, the way Ajay sir and Mamina sir and Ravinath ji and everybody has really narrated how really India is geared up on MSME, SME supports. And it's a true fact that, right, we need to really take care of SMEs and MSMEs and from a banking perspective or overall digital literacy perspective, so that they should aware of all of these schemes and these various form factors wherein they can really raise money and start or work on their businesses, right? Now, coming back to the banking or the customer experience, which is really happening on the lending side, I think if you look at the overall banking in India, I think it's a mix of banking. We have seen a lot of work is happening on the retail side. In Indian context, we have seen a UPI movement, right? So wherein UPI is used by retail, most of the retail customers to do the fund transfers and so on. Similarly, I think on the SME side, since last couple of years, a lot of things are happening on the banking side also. If we look at the example of a DCB bank, so we are SME bank. Our 90% customers are SMEs, and that's how we look at how do we really innovate a lot of mechanisms to really support SMEs and MSMEs. So we run a program called as the Innovation Carnival at the DCB Bank, and one of the objective or one of the theme of this program is that how do we create a sustainable business model for SMEs. What I mean to say that today's banking is a monolithic banking most of the time when we see that SMEs are visiting bank branches, right, or doing some kind of operations on a corporate internet banking kind of a product which bank does offer to them. So now eventually we have partnered with some startups or some fintech companies, so wherein most of the SMEs use Tally or Zoho or similar kind of platforms, and based upon the what in which state they are, right? So it's an opportunity for SMEs to onboard themselves to this bank, and moreover we are providing a service on these platforms that they can bank not only with one bank but any bank, right? So likewise it's called as open banking model. So that's how open banking model is coming to the in a way of SMEs, wherein they can do their day-to-day operations of inventory management on the same platform, followed by they can really do the forecasting also, how they are going to do their businesses and so on. So if you divide the SME journey as a customer journey, it's a first step is like, how do we onboard customers, right? How do we onboard SMEs for banking ecosystems? I think it was an era like it's a paper-based banking. It is always there, and it will be there more or less when we look at a branch banking kind of a model, right? So customer has to visit and open their account with the help of a lot of documentation and so on. And many customers don't have those required supporting things, right? So that is why they don't have a bank accounts also. So in this case, like what we have seen in the Indian banking context, a lot of new things are coming, so-called alternate scores. So based upon their expenses, based upon their inventory management, and based upon their alternate data, we can always come up with some kind of a digital score or digital identity. Okay, on that way, we can do the funding to them. It may not be the large level funding, but I think it is small ticket size of funding we have seen. Some of the themes which we have seen is like reimagine the overall customer experience for the SME customers. And so-called we have crores of SMEs. How do we leverage on this data, right? So GST came into our life in 17, and we have a lot of data wherein their day-to-day financial transactions are captured in GST. The banks are leveraging and data, understand the data, how SMEs are performing, and if their performance is going down, this data is useful for banks to go back immediately. Are you in need of some kind of funds, right? So this kind of a disconnected experience now getting connected with some kind of innovations onto this platform. There are other ways which we see on a digital lending, like automated decision making. I think earlier those manual intervention for a maker checker, followed by there are several processes in banking, and these processes can be automated with the help of technologies like robotic process automation or OCR and so on. And these models, like the whole deployment model, is going on a cloud. What I mean to say that technology is really helping. Although we have a lot of incentivization, a lot of schemes available in India for SMEs, and SMEs getting onboarded, but what next, right? SME is onboarded and back, but how do you really understand his performance, right? How do you really provide a better architecture where his performance, day-to-day operations are unaffected? So adoption of a cloud, adoption of a data, understanding of a customer, and adoption of a big data, so that I understand the data and give back him the much more needed exact banking experience. So I think in Indian context, banks are now creating their own platforms for especially SMEs and MSMEs. And since this Atmanirbhar is being announced, most of the banks are now geared up, including DCB also, to create these platforms for the SMEs. The way we have seen UPI is a platform for retail, right, for payments. I would recommend there has to be some global platform, right? Say example, ASSOCHAM is spearheading, or some other non-profit organization, so that it becomes a world or a word for SMEs. Yeah, this is my platform, this is my marketplace where I can do every other operation. I think we have to really work on that. One of the experiment which regulators have done with the help of account aggregator. Right? Account aggregator, what it is, like what UPI done for payments, account aggregator is going to do for lending and much more other instruments, say example, wealth management, so on. To begin with, account aggregators are working with the banks, and they are leveraging on the data, like data is being provided by GST or banks itself, and use this data and provide those immediate funding support or immediate banking support for SMEs or MSMEs. To begin with, AI or account aggregators are looking at these kind of use cases. So the disconnected experience which we have seen in India, and that can be really plugged in very well, so that SMEs does understand, yeah, these are all the things are available in front of them through various banks. Now, coming back to the various inputs which we have heard from our experts in this panel, one most important thing is a digital literacy. Very, very important, and availability of the digital infrastructure, so-called internet or smartphones or smart laptops or devices for those SMEs. So although we keep on creating platforms, it's very, very important. There has to be some kind of a program at a nation level so that SMEs does understand, yeah, this is something available. And for that, this digital literacy program will help them to understand these many schemes are available, these many platforms are available, or a global platform available where they can onboard themselves, manage their inventories, manage their forecast, and this data can be utilized in a better regulation by banks or NBFCs and so on. Now, new wave is coming, Somnathji, is like alternate banks, right? So, or fintechs or neo bankings or challenger banking. The best part of these banks is that they are working closely with the banking ecosystem. Say, example, if you ask a bank, create a platform for SMEs in the next 2 days, right? Banks have their own work around not only around MSMEs or SMEs, but retail, corporate, and so many other products. So what is happening? Bank have created an open banking architecture, which can be used by these challenger banks or fintech companies. And say, example, Capital Float, Neo Growth, or SME Corner. These kind of companies are creating a model for these SMEs so that this adoption of a loan or availability of loan is immediately available to the SMEs. Once again, even if it is available, I think digital literacy program at a nationwide will be really helpful for all of these SMEs. So I just cut down, like I have seen one experience visiting some of the SMEs. I keep on visiting on the floor. What's really experience? We do visit our SMEs at our branches, ask them what is there they are looking at, are they happy with the current process and so on. The innovation which we had created with one SME to build a platform, that platform gives opportunity to do the inventory management, forecasting, as well as data. That data is utilized by our branch officer to give back him a much more needed service. Similar platform, many other banks have really implemented in a silos, right? If you bring on that centralization of all that platform, it will be very, very helpful. I think I was fascinated by Ravindranathji, the way he has narrated, right? We should have a greater framework. I think this is the right time at a national level to utilize artificial intelligence, or at a larger level to understand how are we really moving ahead compared to other countries, right? Recently, we have announced a global innovation index for all the countries, and we have seen India is still at a 46, although we have surpassed 2 ranks, but other countries are moving at a lot. And if you have if you want a better innovation index, I think one of the aspects is to really take care of your SMEs with a better technology and a better government models. I think government models are there, but we need to see how these various technology and various service providers and various banks are working on their silos journeys. It has to be consolidated. I think this is the right time to integrate all of these stakeholders under a blockchain kind of a network, right? Where we will have a better trust, right? So today we have a lot of challenges. How do we identify right SMEs? How do we identify whether this SME is really a trustworthy? I think bringing on a blockchain, AI in combination, I think will bring on a lot of foundational change in the current internet-based architectures. So in a nutshell, some organization has to meet, or somebody has to really do these kind of campaigns and hackathons to bring a right platform, a UPI like a platform for SMEs, which should be in a local language, in user-friendly way, and the government should promote it more and more so that it becomes a backbone for SMEs and MSMEs. I think technology has given this example in the past, how retail customer is moved from your branch banking to the smart banking with the mobile phones. Similarly, I think technology should be one of the answers with the help of various schemes which we spoke at ECLGS and BSc, right? I think that's how we can really help our SMEs, and it will inherently help our GDP. So thank you, Somnathji, for inviting me here for this great session, I must say. Yeah.
Thank you, Mr. Prasanna Lohar. It was really always nice to listen to you. I have been to many of your sessions on the digital side, and I know DCB is a bank which is catering to SMEs. Some of the good points we actually touched upon on the digital side. A lot of work has happened on the branch side, how customers moving from branch to digital banking. More important is the alternate data points which you are saying. See, this alternate data points has made these credit engines have really given 15% of hike in the number of cases which has been passed. Earlier, if 150 cases are getting passed, now because of the credit engines, it is about 65 to 70. So these are the power of alternate data points. While it's a very in-depth discussion, more, but I think you touched upon the most important parts. Thank you so much, Prasanna, for giving this perspective. We now move to Mr. Mukesh Bubna, who is the founder and CEO of Monexo, which is a leading peer-to-peer company. And over to you, sir, to know your perspective about this. Thank you.
Very much. I think I have a couple of 5 minutes max here.
We are running short of time, but what do you what
I'll
can do?
be very sharp. I'll be very sharp at points. So apologies if I don't thank and request everybody. I think I agree that SMEs don't get credit easily, but things have changed.
You have to be a bit louder, Mukesh. Your voice is coming.
1 second.
I think we lost Mukesh because of the bandwidth. While Mukesh, yeah, yeah.
Now audible?
Yeah, you're audible. There's some bandwidth issue, I think.
Okay, so I'm back. Thank you. Now, I was overseas for last 20 years and I came back only 2 years back into India. And I've seen a sea change, and I can very proudly say India has made major strides in enabling financing to SMEs. When I came back, I saw Treds, which is on the BSE platform, where you can go and put your invoices and banks are connected to discount those invoices and they bid for each other. Now, how beautiful is that? Then the last 2 years or last 4 years, we've seen GST getting implemented. Now, based on GST, there are a lot of companies which are doing financing. Third point is recently, which Prasanna also mentioned, is about account aggregator. So we recently talked about trust deficit. And now if you look at it, GST data just takes that trust deficit away. Anybody can look at that GST filing and come out with your turnover, and that's a clear way of financing for most banks or for any NBFC going forward. Then there's a recent work which is going on Open Credit Enablement Network, OCEN, OCEN, yes. It's a huge platform coming across where they're trying to think of how to even make a 15 rupee or 100 rupee or 500 rupee credit available all the way to thousands of bucks. Short term, long term, everything is going to be available there. An account aggregator. The days have gone by where you need a chartered accountant to certify your balance sheet, and then you have to go to bankers. There are purchase invoicing companies, there are sales invoicing companies which are willing to buy. Beyond that, all this, we only knew bankers, we knew SIDBI, we knew NBFCs. Now, the kind of companies we are creating, which is licensed under RBI, is called peer-to-peer lending. That means one individual can lend to another individual through us. And that process, the lender does not require an RBI license or a lending license, and Monexo takes care of all the underwriting, screening, and collecting from the borrower and provides a better return to the lenders. In my view, yes, we've gone through a lot of hard times. COVID may have added to the challenges, but the digital economy, the roadmap of Atmanirbhar India, a $5 trillion economy by 2025, looks to me a reality, and we are moving with great strides ahead. Thank you very much, Somnath.
Thank you, Mukesh. I think it was very short, sweet, and it was very apt. And I know the great work Monexo is doing, and which is rightly, yes, the platform, any peer-to-peer company, if it is properly done, I think it takes care of the risk and the credit and the other thing. So if I'm giving a loan to someone else informally, I think it's better to go through P2P, where it is safe, secured, and trusted with the proper regulated company. That's what I would say. And thank you. I think it's great. So what we do is, I will speak on the private equity and the VC side. I'll also take about 4 to 5 minutes, and then we'll come to the panelists on some of the question, and then we have one question on the box, which were on the chat box, which we will take up. So private equity, venture capital, family offices, these are another way of raising capital. This is basically equity. One is equity, and also there's something called a venture debt, which is a new concept, and very few companies in India like Aniket Capital or IFL or Trifecta doing venture debt. But what is a dilution of equity? Obviously, it is not for very small SME, but for the SME companies where they are not able to raise debt from the bank because of the collateral, because of the cash flow, but the business looks very promising. They can dilute a bit of equity from the investor and raise capital. What happens in this? The advantage of this is purely that when you raise capital, these investors will come for a short period of time. It's not that they will come and take your business and go away. They come and they have an exit clause. They want to exit. For them, it's only making money, coming there, working with you, make the valuation higher, exit at the right stage. Also, it is not only finance. You also get a strategic investor. That means they also connect you with better companies, better alliances, improve your value chain, because they also have an interest on your ultimately on your valuation. Thereby, this equity investor, I think, is another source of raising capital, and it can go from a small seed level to 25 to 50 lakhs to whatever amount it can go. This has become why we are talking so much about private equity and venture capital now, because if you look at the last quarter data, the Q3 of calendar year, Q3 of 2021, it's about 17.1 billion amount has been raised by the startups or largely by the startups, which is the total of 7 years funding which has been done in the previous 7 years. So what we are, and more so, the investment from US towards China has reduced. India has become a very favorite and hot destination for the investments. So what we are trying to say is that India will continue to get this investment for next 4 to 5 years, at least till 2025. And the SMEs can benefit out of it. This culture was earlier not there. It has come off late, the raising capital. So there are SMEs who have the potential, and these investments, equity investments, are not done on cash flows. It is done on the business model and on the promises the business had. That's the reason you will see that a lot of companies who are probably only operating profit negative or EBITDA negative or a net loss, but the investors know that if you put money, the engine is so strong, it will deliver numbers. I have the eminent panelists, I'm sure they come with this, but private equity, venture capitals, and family offices are great source of raising money for the SMEs. Number, how to do? There are smaller investment bankers, there are advisors whom they should approach, and they can advise them where to go and raise capital. Also, there are many SMEs there are many VCs and Ps who are directly investing in SMEs. They also approach, and this platform has become very common nowadays. So this is an alternative investment which they can look at, and also many a times the investor look at an exit route of IPO. Not that they just find another strategic investor and go. They help the company to exit through a IPO, which also helps the SME to grow. As you heard Ajayji saying that IPO gives you credibility, it gives you low cost of capital, and so many things. So ultimately, That is what it is. So this private equity, venture capital, family offices, this is the alternate way of raising capital through equity. There's something called venture debt. I'll take a minute on that. Venture debt comes at a later period of time when it's a high cost debt, but it has a moratorium and the payment is made through bullet payments. These are for companies where they are high growth company. They want to buy some company, or the promoter want to buy back their own shares. For them it comes. This is also a new concept, but it is predominantly very strong and a lot of companies are taking it. With this, I will close my bit on the private equity and the family offices. But I request all the SME companies, and I request ASSOCHAM also to do this kind of awareness session, because these are a very good source of raising capital. At least in the recent times, we have seen until 2025, what we expect that this space will keep growing. What we do is we quickly do one round of small winding up before we take over the question. I just want to ask Mr. Ajay Thakur. See, you have met 36,000 promoters, and right, you have been going around. But are you formally doing any kind of awareness session, or so that the SMEs know how to get capital from you and how to get into the stock market?
Pardon, can you please repeat the question?
Ajay, I'm saying that I know you have met 36,000 companies, and you have approached, and you also have alternate channels like consultants, chartered accountants. I'm just asking that, is there any regular awareness session, more so in the tier 3 and 4 cities? Are you doing across the country where SMEs, they know that this is the channel where I can go and platform where I can raise money? So I'm talking about more for the smaller cities.
Somnathji, in fact, in last 7 years, we have done 2,300 seminars. This I am talking about physical seminars, and that has been across the country. Irrespective of metro, we have done a lot of events in tier 2, tier 3 cities also. And even in this COVID period, we have done almost 300 webinars. So it's our regular process to reach as many promoters as we can through physical seminar or virtual seminars, to apprise the promoters about the benefit of listing and all those things. So it's a regular process that we keep on doing. In fact, with ASSOCHAM only, we have done thousands of events.
Right. Thank you. I just request Mr. Meena. Mr. Meena is there? Mr. SR Meena?
Yes, please. I am very much here.
Mr. Meena, the schemes you have mentioned, I think it was really good. But what we have seen is many SMEs, MSME are not approaching. They feel scared to approach it. Please, again, I'm going to the smaller cities, tier 3, tier 4. And that's what our concern has been seen. Because otherwise, schemes you have are good schemes which are up to 2025. Then there are various kind of schemes which you have shown. How do you address that? Smaller cities where customers are scared to approach to the bank, to SIDBI.
Now the schemes are available online. They can apply the application sitting in their office. So this visiting is now not required. At the later stage, we approach them after receipt of the application for submission of the additional information. So I don't think there is some issue regarding the approaching to SIDBI for availing the benefit under this scheme. And we do publicize our scheme through webinars, through this booklets of the industry associations, and interactions with industries and industry associations ourselves also. So we are making them aware about this scheme. Now people are approaching and taking the benefit of this scheme. Even if you see the data of the Northeast under the special schemes like StandUp, the CGTMSC coverage, now the data are picking up, and they speak that the benefit is being extended to the remotest place of our country.
Okay.
Mudra I have not discussed, but Mudra availment in Northeast is very good.
So, Mr. Meena, we have a question here on the chat box. I think I'll address it to you only. Mr. Ahmed had written that, but I have seen many companies in MSME sector and at the verge of closing. On the ground, they are closing, selling their machine assets now. Is there any particular reason? Look at Faridabad, Ghaziabad, and some old sectors. Because you are a lender here, so just wanted to take your views.
Yes, this may be the pain areas of these industries, and many may be closing up because we are facing this COVID-related problem for last almost 2 years. So, the old units having the old technology, not able to manage their operations, they may be in that stage, but they can still approach to their respective banker for some suitable rehabilitation with restructuring or some additional moratorium. Now RBI has already come up with a lot of schemes for these restructuring and moratorium without affecting the quality of assets. So they can take a benefit of those schemes. If they are eligible under ECLGS, then 20%, 30%, even 40% benefit is also available. Now, there is no problem in getting the funding as far as our project is viable. But if the project is not viable, then exit is the best option so that the locked value of that unit can be unlocked by somebody else who can run that unit.
Thank you. Thank you. I think, Mr. Meena, that's a very valid point. You said that if there's no option, business is closed, it has to be exited. I mean, we have to unlock and get the money back. Probably it's a hard way around, but sadly, that is the way. Thank you. Thank you, Mr. Meena.
Thank you. Thank you, please.
I'll just ask Prasanna on the digital piece that, see, we have seen about 12% of transactions are happening on the digital side. So how do you think the small MSMEs and SMEs are able to participate in that, or how they get any benefit, and how do you think this 12% will grow up?
So what we have seen in the digital adoption, right? Last 4 to 5 years, we have seen since demonetization, we have seen push of digital payments so far in Indian context with the launch of UPI and a lot of consolidation on Bharat Bill payments or similar kind of exercises which had happened. Now we are speaking about account aggregator, which will evolve on the GST data, right? Most of the SMEs has to share their data onto the GST, and this can be utilized as an entity like a financial information provider. And on the other side, financial information users under AA, where banks and fintech companies and many other entities can provide a better SME lending or SME services to these customers. And other areas is like we have seen big tech companies, right? So-called Googles and Facebook also partnering with some of the banks and some of the entities and providing lending support onto. Recently, Google has launched or Facebook has launched, right? So with a better regulation, we can see how more alternate banking, banking like fintechs and neo bankings or challenger banking can really help. There are some 7-8 banking like challenger banks, including Open or Instaoni, and though are really helping in a better way. Again, they are adding on the open banking architecture. With a better regulation and more decentralized architecture, eventually in the future, we'll be able to do a lot of things. And just imagine a UPI app or a peer-to-peer app, which will help SME to do a lot of things on his mobile phone or on his laptop, and which is well regulated under RBI, and that will really help. I think we need to bring on some innovations on those contexts the way we have done for Aadhaar and UPI. I think we are not far away the way account aggregator is creating that backbone in India.
Thank you. Thank you, Prasanna, on your perspective. I think good points. You mentioned an account aggregator, yes. And also the GST is a strong point, because from the GST data, you can actually give a loan looking at only the GST data, and which is now becoming mandatory for the SMEs and MSME. And this GST loan has become very popular of late. I will just move to Mr. Ravinath ji. I have a question, Mr. Ravinath, that to get that SMEs are very scared to dilute their equity and raise capital. And you are the person who has traveled across length and breadth of the country, and you have seen a lot of small SMEs. How do you think that can be addressed?
Yeah, that is the most crucial point. And how it can be addressed is, in my view, it is those success stories which we need to educate them with. The effort which maybe Mr. Narendra Vadva or Mr. Ajit Thakur are making, the success stories which they have created, because seeing is believing, and especially those which are there in their particular associations. Suppose I take an association, say in Karnataka, in Bangalore. If they have success stories, those people should come and address others. It's only when they come and interact with people that they get some confidence. Otherwise, it is very, very difficult. Let me tell you, I have, even in the recent times, I have met some of the very good companies who are having excellent projects with them, thousands and worth of crores of business which they are still holding, but the challenge which they are facing is paisa nahi hai. And they don't want to grow beyond the borrowings which they have from the banks. And then they are stuck into that leveraging trap. This is a very good output, and even I have been advocating it, but the challenge remains, family business बढ़िया है, जितना पैसा आएगा उतना उसमें वापस डाल दीजिए, otherwise it becomes very difficult. Unless we have more and more of success stories which are being brought in through different media sources, then only we will succeed.
Thank you, Ravindra ji. I think that's a valid point that through these kind of events, through the trade bodies, through other way of addressing people, we should be showcasing the success stories. Otherwise, SMEs are very scared. It's like somebody entering their house and they're occupying their house or capturing their house. But,
very true.
That is true. Thank you so much. I just moved to the last question to Mukesh. You are there, Mr. Mukesh Bubna. So Mukesh, you are doing a P2P business. So I just want to know, many of your lenders and borrowers are self-employed, individuals. Okay. So do you think that P2P this lending is helping, because for them, the smaller one is a business and the individual is almost the same. So are you able to address their query or their pain through your P2P lending? Is Mukesh there? I think we have lost him. Not a problem. I think we've lost him. What I do is, we don't have any other questions in the box. There's only one question which Mr. Meena addressed. So let me sum it up on this. I think it was a very powerful, packed speakers and panelists we had. And there was a lot of good discussion we had. And more so, we have seen different sides. We have seen Mr. Ajay Thakur talking from the market side of things, where SMEs have understood how they can raise capital from the market. Because raising capital, we keep hearing all success stories of the large corporates or the startups splitting into the market, but we don't hear about the SMEs. And I think this is a very important thing which Mr. Ajay Thakur has addressed, that the 348 companies out of the 36,000 he met, and how they are benefiting out of it. And I think this particular platform will keep growing with the capital markets doing well, with the markets doing well, with the economy doing well. I think this will be a very important platform to raise money. Earlier, only SMEs thought debt is my only way, where I go for bank lending or NBFC or from friends and family. But capital market is a very good source of capital. Mr. Meena mentioned so many good schemes which SIDBI has. In fact, probably most of the people, they don't know. They don't know that SIDBI has come out with so many attractive schemes, which we saw, and he said that these are updated on the site, people can access. Mr. Ravinath ji, a person with so in-depth SME knowledge across the country, he actually addressed we heard some of the good points, how we need to remove the barrier from the SMEs on the equity side of it, how to get the lenders to them. I think that's again a very good coming from a non-lending part of it. Prasanna, a banker, Prasanna spoke about digital lending. Prasanna is one of the known person in the banking industry on the digital side, and a lot of work we're doing. And Prasanna mentioned some of how they're helping the aggregator side, how they're helping the SMEs, and all the AI engines. And credit has gone up. So with this alternate data points, earlier credit to SMEs or MSMEs where you submit your income statement, you submit your ITR, and the loan is given basis of the financial. Now, with financial, alternate data points play a very, very, very major role. So, because there are cases we have seen where, and in fact, in the European banks also, they say the same thing, that there are companies who have only 2 years financial history, but we know they are good. We know they have good capability of borrowing, but the data is insufficient. These kind of alternate points are helping to make the credit engine stronger and take a call to give loan to the company who have a minimum credit history. Having a minimum credit history doesn't say that you have a poor credit history. Poor credit history and a minimum credit history are different. So technology has really helped to address that thing. And with all the alternate data points, AI artificial intelligence and the credit engines, I think the lending has improved. The bankers say about 15 to 20% of productivity has increased, and the fintech and the banks are working hand in hand. This will continue to grow. And we heard from Mr. Mukesh Bubna about the GST and the other things he mentioned. I think fantastic point. And as I mentioned, my points were the raising the capital from private equity, venture capital, and family offices. This has been very prominent in nowadays. Even the small startups who are starting the last 2-3 years, they are also approaching the investor. The most of them, India is attracting a lot of money from outside, which has been put into startups. So we have seen how the unlisted space is booming. Unlisted space is basically the SMEs and the startup, because there are hidden jewels there. For the listed space, we can always go to the capital market and we can invest. How do I invest in the startup unlisted space? That's where the private equity VCs are coming. Every day there's a new fund coming up. That means there's a lot of conviction in the economy, lot of conviction on our country and on the SME and the startup ecosystem. That's why this money is being flown into India. And there's a good model to raise fund. As I said, from 25 lakhs, it can go to whatever amount. People should not be scared. And investors will come and go. They will not be in your house forever. They are like guests. They will come, they'll clean your house, they'll make the house better, give you profit, take profit, go away. These are purely professional people. That's another thing. With this, we don't have any other question. So I think, thank you, ASSOCHAM, for giving me the opportunity to moderate and speak. And thank you all the speakers, Mr. Ajay Thakur, Mr. S.R. Meena, Mr. Ravindranath, Mr. Prasanna Lohar, Mr. Mukesh Bubna, for giving their perspective. Thank you, Mr. Nandi, for opening the remark. And I thank you, Kallol. I think I hand it over to Kallol to give the vote of thanks.
Good afternoon, sir. Myself, Kallol Ghosh. On behalf of ASSOCHAM, I take this opportunity to thank all our eminent speakers for their valuable time given us today. And we are grateful to your support and participation at our initiative. We are delighted by your supportive thoughts and encouragement to the MSME sector. We are looking forward to having more interaction with you on SME sector. I again thank you so much, everyone. Thank you, sir.
Thank you.
Thank you.
Thank you very much.
Thank you very much. Thank you. Thank you, SME.